Hi friends, today we're diving into another essential tool in technical analysis that every trader should have in their toolkit, the CCI. In this video we'll explain what CCI is, how it works, why it's useful, and how you can use it in your trading strategies. If you haven't subscribed yet, now's the perfect time. Let's get started. First things first, now what is the CCI? The Commodity Channel Index is an indicator developed in 1980 by trader Donald Lambert. Despite its name, the Commodity Channel Index isn't just for commodities, it works for analyzing any market including cryptocurrencies. The primary function of the CCI is to measure how far a given asset's price deviates from its average over a specific period. If the price is too high or too low compared to this average, it could indicate that the asset is overbought or oversold, providing potential entry or exit points for traders. Let's start by setting up the indicator to minimize potential inaccuracies. Just double-click on the indicator line, then change both values from -100 to 100 to -200 plus 200. It will enhance the precision of your analysis and as a result improve the quality of trades. How does the CCI work? The CCI oscillates between +200 and -200. Values above 200 indicate the asset is overbought, possibly signaling a sell. Values below -200 suggest the asset is oversold, potentially indicating a buy. However, it's crucial to remember that the CCI only sometimes provides 100% accurate signals. Sometimes it can remain in overbought or oversold zones for extended periods, especially in solid trends. That is why it's essential to combine it with other analysis tools. Let's explore a few key scenarios for using CCI in trading using the Bitcoin USDT pair as an example. Number 1. Trend reversal. Detection. When the CCI crosses above +200, it might signal that the market is overheating and a downturn could be coming. For instance, if you notice that Bitcoin's CCI climbs above +200, it could be a signal for price correction. Similarly, when the CCI dips below -100, it could indicate a potential upward reversal. Number 2. Spotting divergences. The CCI can also identify divergences when the price moves in one direction but the indicator moves in the opposite direction. For example, if Bitcoin's price continues to rise but the CCI starts to fail, this could warn that the current trend is weakening and a reversal might be near. Number 3. Entering trends. A popular strategy with the CCI is using it to spot trend entry points. When the CCI moves out of the oversold zone below -200 and climbs higher, it can signal the start of a new uptrend. Conversely, when the CCI exits the overbought zone above +200, it may indicate the beginning of a downtrend. Now let's take a look at the Bitcoin chart example. Notice here how Bitcoin's price kept rising and the CCI crossed the +200 level, showing that the asset was overbought. This signaled lock-in profits and the cost soon dropped. In another example, the CCI fell below -200, signaling Bitcoin was oversold. And what happened next? Exactly, there was an upward market reversal. As you can see, the CCI can help you identify hidden signals for decision-making. However, like any indicator, it doesn't provide guaranteed results, so it's best to combine it with other analysis methods. Here are 3 tips for using the CCI. Use multiple indicators. While the CCI can give strong signals, so relying only on it can be risky. Combine the CCI with other technical tools such as support and resistance levels, candlestick patterns, and the RSI indicator. Consider the time frame. The CCI behaves differently across various time frames. For short-term trading, 1-hour or 4-hour time frames work better. For longer-term strategies, focus on daily or weekly charts. Keep in mind that shorter time frames have more noise and false signals, so beginners should stick to higher time frames. Practice on a demo account. Before using the CCI on a live account, test it out in a demo account. This will help you better understand how the indicator works and develop analytical skills without risking real money. Try different settings, watch market behavior, and review your decisions. In conclusion, the CCI is a powerful indicator that offers a fresh perspective on price movements. But remember, success in trading is not just about data analysis, it also requires discipline, patience, and continuous learning. If you found this video helpful, don't forget to hit the like button and subscribe to the channel so you don't miss future content. That's all for today. Good luck with your trades and see you in the next video.